If you've owned your home for more than 2 years and your home is appreciated, which in Bucks and Montgomery County means almost everyone who bought a home before 2022, you may be sitting on a gain that feels scary from a tax perspective. Most homeowners dramatically overestimate what they'll owe. In many cases, they owe nothing at all. This video explains why and what the specific rules are for Pennsylvania homeowners. Important disclaimer before we start, I am a realtor and a pricing strategy advisor. I'm not a tax professional. This video is general educational information, not tax advice for your specific situation. Before you make any decisions based on the tax implications of selling your home, please consult a CPA or tax attorney who can look at your specific numbers. What I can do is I can give you the framework so you understand the landscape and have a more informed conversation with your tax advisor. With that said, let's get into it because the framework is genuinely good news for most homeowners in this market. The Section 121 exclusion, the most important tax rule most homeowners don't know. Section 121 of the Internal Revenue Code allows homeowners to exclude a significant amount of capital gain from the sale of their primary residence from federal income tax. Here's the specific rule. If you've owned your home and lived in it as your primary residence for at least 2 of the 5 years immediately before the sale, you can exclude up to $250,000 of capital gain if you're a single filer, or up to $500,000 of capital gain if you're married and filing jointly. Let me make that concrete. You bought a home in Warrington in 2015 for $380,000. It's now worth $620,000. Your gain is $240,000. If you're married, the entire $240,000 gain is excluded under Section 121. You owe zero federal capital gains tax on the transaction. Zero. Now let's say you bought in 2010 for $350,000 and your home is now worth $750,000. Your gain was $400,000. If you're married, $500,000 is excluded, so your entire $400,000 is still excluded. Zero capital gains tax. The scenario where you actually owe federal capital gains tax on a home sale, your gain exceeds the exclusion amount. If you're married and your gain is $600,000, the amount over $500,000 in this case is $100,000. That would be subject to capital gains tax. For most homeowners in Bucks and Montgomery County, gains in the multi-$100,000 range can be fully or largely sheltered by exclusion. What about the Pennsylvania state capital gains tax? Pennsylvania taxes capital gains as ordinary income at the flat state income rate of 3.07%. However, and this is critical, Pennsylvania also has its own exclusion for the sale of a primary residence. Pennsylvania generally follows federal Section 121 exclusion rules, meaning if you qualify for the federal exclusion, your Pennsylvania gain is also typically excluded up to the same limits. Again, your CPA should verify this for you for your specific situation. State tax rules can have nuances that depend on your residency status, the specific transaction structure, and any other income in that tax year. What counts as your cost basis and why it matters? Your capital gain is not simply the difference between what you paid and what you sold for. Your cost basis, the number you subtract the sale price from, includes your original purchase price plus certain improvements you made to the property over the years you owned it. Kitchen remodel, bathroom addition, new HVAC, finished basement, an addition. These can all be added to your cost basis, which is going to reduce your taxable gain. This is where keeping records of major home improvements over the years pays off. If you put in $80,000 in improvement to a home you bought for $350K, your cost basis is $430K, not $350K. That additional $80,000 in basis reduces your gain dollar for dollar. The 2-year rule, when it applies and when it doesn't. You must have owned and lived in the home as your primary residence for at least 2 of the 5 years before the sale. If you own for less than 2 years, or if the home is not your primary residence, it's a rental property, a vacation home, different rules apply, and the exclusion either doesn't apply or applies at a reduced amount. Again, this is CPA territory for these kinds of specific questions. What this means practically for homeowners in Bucks and Montgomery County, if you bought your home before 2022, you have lived in it as your primary residence, and you are married, there's an excellent chance the capital gains tax question is not the obstacle you think it is. For most of the sellers I talk to in this market, once they actually run the numbers with their CPA, the tax liability is either zero or significantly lower than they feared. The fear of capital gains tax is keeping some people from even doing the math. And the math often shows that the tax picture is much better than the fear suggested. Don't let an unexamined fear about taxes be the reason you stay stuck in a home that no longer fits your life. Talk to your CPA about your specific numbers. That's the only way to know exactly what you owe. What I can help you with is the other side of the question. What is your home worth right now? What you'd actually net after selling costs, and whether the move makes financial sense once the tax picture is clear. Text me at 267-934-5674 or find the seller guide and the Where Do I Go If I Sell guide in the description below. If you found this video useful, please hit the like and subscribe button. I'm Josh Wernick, and I will see you in the next one.